Could we be heading into a recession? And if so, what exactly does that mean for the housing market? Consumer confidence is dropping, mortgage rates have been bouncing around, and home sales for the past couple of years have been, well, frozen. But here's the thing. Bad news for the economy can actually be good news for mortgage rates. So what does all of this mean if you're considering buying or selling a home now? Well, let's cut through the noise and find out. Hi, this is Andrew with the Andrew Smith team, eXp Realty here in Frisco, Texas, and welcome to my September 2025 real estate market update. Now, my goal this month is to provide you with some clarity. There's definitely a lot of uncertainty out there, and I know many of you are trying to make sense of conflicting headlines about rates, home prices, and the economy overall. Well, today I'm going to walk you through the latest national trends, and I'm going to show you what's happening right here in Frisco. And if you're not in Frisco, that's fine. I invite you to stick around until I get to the local section of this video, where I'm going to share with you exactly how to get the exact same market data for any city or zip code of interest to you. All right, so in this video, here's exactly what we're going to cover. We're going to, number one, talk about what economists are saying about a recession. What are the risks and how consumer sentiment is shaping the current housing market. Number two, we're going to look at mortgage rates, where they've been, where they think they are heading, and why the latest jobs report could actually be working in home buyers' favor. Number three, home prices. What is going on? Many buyers out there believe that they are about to fall off of a cliff. But what does the data say? We're going to look at what's going on nationally, and I'll share with you what the experts are saying and where they are expecting them to go, not only in the months ahead, but all the way through 2029. And ultimately real estate is always local, which is why we're going to dive into the local market. Here in Frisco, I'm going to show you the latest trends in prices, inventory, price reductions, and as I mentioned, I'm going to share with you how you can get that exact same information for any city or zip code in the entire country. And if you've just generally got questions about what's going on, you're confused, you've got a specific situation that you'd like to talk through, I wanted to remind you that I always offer everyone a free 30-minute consultation where we can dive into the specifics of what's bothering you or what questions you have, and hopefully provide some clarity so that you can make the best decision for you and your family. To book that call, go ahead and click this QR code, which will take you directly to my calendar link, or alternatively, there is in the description below, you're going to find a link to that calendar as well. So I'm going to start off today by sharing my screen, and we're going to walk through what some of those national narratives and trends are to kind of give you an overview on what's going on in the real estate market at large. Mark Zandi is the chief economist at Moody's Analytics, and here's what he has to say. He said the risks are increasingly high that we are in fact going into a recession. He notes that we're not there yet, and maybe this thing does get turned around, but that's increasingly becoming hard to do with each passing week. And it just goes to show there's generally a lot of the same sort of news and sentiment out there, and it's really affecting how consumers think. As a matter of fact, there was recently a survey done by LendingTree. It shows that people are worried about an upcoming recession. In fact, nearly 2 in 3 Americans think a recession is coming, and 74% of Americans admit that world news and or current events affect their financial decisions. And it's natural, isn't it? I mean, I'm hearing it from buyers all the time right now. They're definitely worried about what is going on in the economy overall. And on that note, as I'm recording this, there's a lot of speculation that the Federal Reserve is going to cut interest rates at their meeting next week. And again, although a lot of people focus heavily on that, as I've pointed out in videos before, mortgage rates are not tied directly to what the Federal Reserve does with their rate, the federal funds rate. It influences mortgage rates, but mortgage rates are tied to the 10-year Treasury bill more directly. But saying that, as I mentioned right in the beginning of this video, bad news in the economy is often good news for mortgage rates. So take a look at this. As you probably remember, on August 1st, the July jobs report was released and the numbers were horrific. They were way lower than any of the analysts had expected them to be. And as a result, look what happened. Here's when the report was released, and look what mortgage rates did. They absolutely plummeted. They dropped, and they've been bouncing around ever since. They went back up, they've come back down. As a matter of fact, they dropped again today, again, as I'm recording this, and we're sitting at the lowest point they've been in quite some time. And I'm going to share some additional information on that with you in just a minute. But where do they go from here? Well, as of September 2nd, the experts out there, Fannie Mae, the Mortgage Bankers Association, and Wells Fargo, in this case, released their latest projections on mortgage rates. And these have all been revised down slightly from where they were when I did my August market update. So for quarter 3, they were forecasting 6.68%. We're actually below that right now. Then you look at quarter 4, 6.55, quarter 1 of 2026, 6.47, and quarter 2 of 2026, 6.40. Now I have to say that personally, and I'm going to preface that by saying I am by no means a mortgage rate expert, and I'm glad I don't have to predict them, but I do think, based on everything that I'm seeing currently, I do think that those forecasts are a little bit conservative. I do think rates are going to be lower than that overall, based upon what's coming out right now. As a matter of fact, a report came out, or an article came out in Business Insider today that says there's quite a lot of signs that the housing market itself is starting to thaw. I'm going to share that article with you right here. All right, so here's that article from Business Insider, and it starts out, the title of it, Housing Market. Thaw is coming as mortgage rates drop to lowest they have been in a year. And as we look just at a couple of the main highlights here, it says, mortgage rates are flashing positive signal for home buyers. Rates on 30-year and 15-year mortgages fell to their lowest level in about a year. That's good news. And we're starting to see, and actually for the past couple of weeks, we've started to see more activity from buyers. So again, as of this, the Mortgage Bankers Association estimates that 30-year mortgage rates fell to about 6.49% on the week ending September 5th. And here's the point. Borrower activity, meanwhile, has been picking up. So as you can see right here, mortgage applications jumped 9.2%. Why is that important? Well, not only did they jump 9.2% for the week, they rose 12% over the last week, and they climbed 34% compared to the same week last year. Here's why that's important. Mortgage applications are what we would consider a leading indicator. Most buyers out there don't go through the process of getting pre-approved for a mortgage unless they actually intend to buy a home. So when you see an increase in mortgage applications like this, it usually starts to show up in the sales data in about 90 to 120 days. That's interesting because right now we're in September, right? Which shows that the latter part of the year, through the fall and into the early part of the winter, could be stronger than what we normally see. And again, the downward movement in rates, which I just showed you based on that jobs report, spurred the strongest week of buyer demand since 2022, as lower borrowing costs offer a glimmer of hope for prospective home buyers who've been sidelined for the past few years. So the bottom line there, at least with regards to mortgage rates, which as you know is a key piece of the equation, is it looks as though positive trends in mortgage rates is actually increasing buyer sentiment. And it's increasing buyer sentiment and buyer activity at a time when home inventory nationwide is starting to fall, meaning the number of homes up for sale is coming down. So what does that mean in terms of prices? Because as we know, home prices ultimately are based on supply and demand. So let me show you what the latest projections are with regards to home prices. This chart right here, I actually thought was fairly interesting that we got this information because, as many of you may know, if you've seen my monthly market updates before, I have quite often followed the median list price. And the reason I have done that is median list prices are an indication of future sales prices. Now, I know list prices can change, but think about it. In today's market, a seller doesn't put a home up for sale just to test the market for the most part. People that are putting their homes up for sale actually need to sell. So with that in mind, where they're listing the home is usually where you expect to see sales prices come in a few months. So this right here is from Realtor.com, where they're showing this on a national level. This goes all the way back to January of 2017. As you can see, prices were climbing. But look at this. Since about the middle or April of 2022, they've been staying in this narrow band. So the list prices have flattened, which kind of goes in line with what many people have been saying with regards to the market, in that the prices are not just continuing to go up like we saw post-COVID. Now, with that in mind, let me move myself out of the way here. Where are prices going to go from here? And again, nobody knows for sure. Now this graph here is quite telling. It goes all the way back to 1975. So it shows where prices are. They were climbing. This right here is the Great Recession, the big housing bubble that burst. And then we saw prices start to climb again. This right here is where we got to post-COVID, when many markets saw a little bit of a price adjustment, and then prices started to continue going up again. Now, they're not going up at breakneck pace like they were in the past, but this is a very telling graph, and here's why. This is taken directly from the Home Price Expectation Survey. So what in the world is that? Well, it's not just one person's opinion. This is sent out to over 50 leading economists and housing market experts on having them give their opinion on where prices are going. And then all of that is compiled and put together, right? So it's averaged out. So if we look at this, the most optimistic people in that survey came back and said between the end of 2025 and 2029, they're expecting cumulative home price appreciation of 27.4%. If you take a look at all panelists, the most pessimistic to the most optimistic, and you average all those together, you get 17.6% appreciation over the next 4 years. If you look at even the most pessimistic of the analysts out there, they're forecasting 6.7% appreciation. What exactly does this mean? Well, buyers, if you're one of the buyers that's been sitting on the fence expecting that we're going to fall off a cliff and that home prices are going to dive, I don't know where you're getting that information from. And again, I'm not saying this is exactly what's going to happen, but if all of the leading experts are forecasting home prices to increase cumulatively over the next 5 years, that's a pretty good indication that we're not going to see massive price declines as many have been hoping for or thinking that were going to happen. And as I've said, I've seen nothing in any of the leading indicators that I look at both nationally and here in Frisco to show me that prices are about to turn negative in a meaningful manner. So with that in mind, wrapping up on this about home prices and the national trends here, Odetta Kushi, she's the Deputy Chief Economist at First American, and she says, while there will be significant regional variation, the underlying fundamental conditions of the national housing market support a neutral moderation of home prices rather than a sharp decline. Bottom line, all real estate's local. What happens in one market may not match what happens in another market, But the idea of a national price decline or a sharp decline is just not there. Now, Danielle Hale, she's the chief economist at Realtor.com, and she's basically saying the exact same thing. The housing market has cooled modestly in 2025, but the extent and persistence of rebalancing, that means the market neither favoring buyers or sellers, really varies across the country. And regionally, home buyers and sellers are likely to experience a very different market. Here in Texas and most of the South, the market's pretty balanced. In parts of the Midwest, upper Midwest especially, and the Northeast, the market still strongly favors sellers, and there's a little inventory, lots of multiple offers, and a different market. So that's why it's really important to understand your local data. Now, with that in mind, I'm going to turn my attention now to the local market here in Frisco. And as mentioned right at the beginning, if Frisco's not your market, if you're watching this from somewhere outside of the North Texas area, then still stay with me, because the information I go through is going to be relevant for any city or zip code in the entire country. And I'm going to share with you exactly how to get that same information for your local market. All right, so what I'm looking at right here is the MLS for Frisco, Texas. So this is the local MLS. I'm looking at the median sales price trends. And as you can see here, for August 2025, the last month that the data is available for, year over year, the median sales price is down 1.3%. Last month, it was up about 1.3%. Month before that, it was down slightly. So these small bounces around are very, very normal. But if you look at this trend line, if you were to pick the midpoint and draw a straight line through here, you will see that overall prices are not really going up. I mean, this is 2022. That's prices going up. So there's some seasonality in here that we experience in Frisco of prices up and down depending upon the time of the year. But as you can see, prices are remaining relatively flat. Now, one of the things to keep in mind, if we look at the total number of homes for sale, this is important here. You can see number of homes for sale ramped up very fast during the spring. We got up to where we were right about comparable to pre-COVID, right? So we didn't really exceed inventory. We matched it. It flattened out for a while, and now we have started to come down. So again, that paints an interesting picture. Mortgage rates are declining, which is spurring buyer activity at the same time as inventory is starting to fall. Could that change? Could more sellers come back? Sure, they could. But if this holds true, or this stays the same, I should say, then it is very likely for us to expect pricing to remain stable or start to increase slightly. Now, one of the most common things I have sellers ask me is, well, wait a minute, I don't want to list it too low because I've got to build a bunch of negotiating room into my price. And I'll be honest with you, the data just doesn't support that. So if we look at this right here, this is the median percent of original list price that homes are selling for. It declined slightly in August, but in general, homes are selling for about 4.5% of where they were listed for originally. That's not final list price, that's original list price. So even if you've taken a couple of price reductions, the final sales price right now is coming in at about 4.5% of that original list price. And you're going to see that percentage start to tighten as both buyers and sellers adjust to local market conditions. Now I'm going to flip over to my Altos reports. And these are the reports that are available for any city or zip code in the country. So right here at the top of the report, you can see search any city or zip code. You can search anywhere. This is good nationwide. A link to this is in the description below. This is going to take you exactly to this report for Frisco, and you can put in the city that you would like. This right here is a market action index. It just kind of shows you how hot or cold the market is. 30 represents a completely balanced market. We're at 33, so it's a pretty balanced market. But again, if I come down here and look at this is inventory. So I want to start on inventory. This dashed line represents the week over week trend, whereas the solid line is the 90-day trend. This confirms week over week the number of homes for sale here in Frisco continues to fall. Okay, so again, less inventory, more buyer activity keeps prices where they are. Just like on the national trend, if I take a look at the median list price, this you can see, this one here is harder to see because of how much it changes week over week depending upon the mix of properties that came to market. This one here is easier to follow the 90-day trend, but you can see it's been pretty flat. And it remains pretty flat. It's starting to dip slightly on the 90-day trend. It did jump up on the weekly numbers, but list prices are holding fairly steady. And then lastly here, I know this has been a longer video, so I apologize for that. But if I look at the properties with a price decrease, this is rather telling. If sellers are having to cut their price before their home goes under market, it can still show weakness in the marketplace. But right here, we're seeing that the number of sellers having to reduce price before going under contract continues to fall. That is a leading indicator of demand in the market overall. So here's the bottom line, really. The housing market isn't crashing, and it's not showing any signs of crashing. It is rebalancing. It is putting itself back into neutral, if you like. Mortgage rates are expected to ease and prices are moderating. And locally, we're seeing that improvement. We're seeing it just the same way, just at a slower pace. The market here in Frisco has remained pretty resilient. It's still an extremely popular place for people moving from out of the area to come to, and that's helped prop up our prices. Now, if you're a buyer, there are definitely opportunities out there, especially with lower mortgage rates and motivated sellers. If you're a seller and you're thinking about listing soon, pricing strategically is very, very important. And you need to understand today's buyer mindset. And again, everyone's situation is different. So if you'd like to talk this through in more details, then I invite you to reach out. Don't forget, if you scan this QR code right here, it's going to take you to my calendar where I offer everyone that free 30-minute, no obligation consultation. So with that in mind, I'd like to thank you so much for watching my September 2025 real estate market update. Please go ahead and like this video, subscribe to this channel for future updates. And if you've got questions, comments, I'd love to hear from you. Put them in the description below. I'd love to know your thoughts on where you think this market is heading. And with that, we will see you in the next video.